Interrupt with Chris Bush and then bring him on the call. He is our national renovation specialist from Town Bank. Chris is a invaluable asset to Town Bank and to everyone that's within Berkshire Hathaway, because he's there to guide us, guide the agents, as well as the customers through the 203K product. So without further ado, I'll give the mic off to Mr. Chris, and we will have him take over.
Thank you. Thanks for having me. I should start by saying we do the 203K product, but we also do the Fannie Mae Homestyle product, and then we also have our own product, which is a Town Select renovation loan. And I'll go through all three and the differences. I definitely, when I do these things, I encourage questions. So, you know, I'll stop at certain points and ask if anyone has a question. You can just unmute yourself and, you know, we get into a discussion, see how that goes. It's not a super large group, so it should be okay. We'll take that as it comes. But I usually like to start these off by just discussing what a renovation loan is, because not everybody is aware of what they are. So a renovation loan is a loan where we give someone the money to buy a house and the money to do needed or unneeded renovations all at the same time. It's the only loan program where we're going to use the future value of a property to determine how much money we can actually lend somebody. Every other loan program that's out there is always based on the current condition and the current value of a property. So they say, well, this property is great, but the roof needs to be replaced, or the value is not there. But when we do a renovation loan, what we do is we look at what work is going to be done and what will the house be worth. What will the house be worth once all that work is completed? So we use the future value of the property. Now, when we do a renovation loan, we finance everything having to do with the renovation loan into the loan. All the renovation stuff's financed. So your contractor payments are financed in, your permits are financed in, inspections, architectural drawings, everything having to do with the renovation is going to be financed into that loan, so that there's no out-of-pocket money to the buyer for anything. And that's right down to the discount points. If you have a buyer that's purchasing a property for $100,000 and they do $100,000 in renovations, then half of their loan is renovation. So if they're paying, let's say, a discount point, then we will let them finance in half of that discount point, because that discount point, half of it has to do with the renovation versus the purchase price of the home. So we will finance everything having to do with the renovation loans, renovations in. Any questions on that so far? Okay, no questions. All right, so let's talk about the different loan types that we have. So the 203K was mentioned. That is FHA's version of a renovation loan. Now, there's two different versions of an FHA 203K. You can do a limited repair renovation loan, or 203K, or you can do a standard 203K. You're going to do a limited repair 203K when you're doing either $31,000 worth of work or less, and you're doing nothing structural. So if you're at 31,000 or less, nothing structural, then we would do a limited repair 203K. On a limited repair 203K, the only thing I need is a contractor's bid. I want the contractor's bid from the person that's going to do the work. We then take that bid, we give it to the appraiser. The appraiser will appraise the property as if everything in that bid is already finished. As long as the value comes back fine, we close on the loan. At closing, we release half of the money to the contractor and the second half once all the work is completed. It's a really, really simple process when you're doing a limited repair. If you do a standard 203K, the only extra step is going to be you have to have what's called a HUD consultant come out to the property. You pay this gentleman money, he comes out, you tell him exactly what you want to do, and then he will also make some suggestions on what needs to be done to pass minimum FHA standards. And then he prepares a report for the buyer and for me, telling us exactly what's being done and how much everything should cost. So there is that extra step of that report, and that report is what we give to the appraiser to appraise the property instead of a contractor's bid. On both programs, your down payment is based on the purchase price plus that report or what the contractor's bid says. And then we add it all together, and then you make a 3.5% down payment on the total. All right. Any questions on that?
Hi, what's the limits between the streamline and the one where you need the HUD? Is there a dollar amount that puts?
Typically it's 31,000. It's really 35,000, but we hold a 10% contingency on all renovations. So if you do 31,000, we're going to hold an additional 3,100 so that if something happens, we have money to fall back on. And what that means is they get in, the contractor busts a pipe, or they find some more problems that they weren't aware of. We always want to have that 10% contingency. So once we add the 3,100 to the 31,000, you're now up at that 35,000. So that's why I always say 31,000 for work. Now, the only time that you might have to go lower than that is if we have to have a 20% contingency for some reason. We will normally hold a 20% contingency if we can't check the utilities. So on a 203K, you don't actually have to have the utilities on at the time of the appraisal. But if they're not on, we're going to hold an extra 10% so that, you know, if there is an issue, then we've got enough money. But normally it's 31,000. All right, any others?
I did. Could you report, Pete, what you just said about the appraiser and the down payment?
Well, we calculate the down payment by taking the purchase price, adding the renovations, the contingency reserve, and any fees that are going into that escrow. You add it all together, and then you make a 3.5% down payment on the total.
Okay, thank you.
Okay. Now, just so that I don't forget, when you guys are writing your contracts and you're writing it for a 203K, you write it just like you would any other contract. You're just going to put the purchase price, you calculate the loan amount based on the purchase price only. Don't address the renovations because you're not going to get the number right because it's a total guess. The only thing you have to put in that contract is type of financing, FHA 203K. So you have to identify the program, but the amendatory clause, use the purchase price, everything else is just completely normal. All right, so next question would be, what types of renovations can you do on a 203K? You can do anything you want on a 203K as long as it's not deemed a luxury item. So you can put in windows, you can do carpet, you can do paint, you can do an addition, you can do appliances, but you can't do a $10,000 Sub-Zero freezer. You can do landscaping, but you can't put in a Japanese garden with a koi pond. You know, things like that. Those would be deemed luxury items. But you could tear the house down to the foundation and build a brand new house up as long as you keep the original foundation. If you find a foundation out in a field of a house that burned down 20 years ago, you can do a renovation loan on that foundation because technically the foundation is the house. So there's really, the sky's the limit. We do a lot of second stories on properties. You know, we can do big stuff, but then we can also just replace the HVAC. You know, so you can go hog wild or you can do bare minimum to pass standards. You know, the sky's the limit on that.
Can you do pools?
Cannot do a pool on a 203K. That would be deemed a luxury item. Now you can repair a pool, you can fill in a pool, but you can't create a pool. Any other questions?
If you were to do this for like a HUD home,
Mhm.
and it was not an insured HUD, so there was a lot of repairs.
Right.
So that would be a perfect way to do a 203K for that.
It's the only way to purchase that, an uninsurable home, unless you're paying cash.
And is there inspections and all of that that's required for the loan?
Well, just your standard, I mean, if you're going to do a standard 203K, then you're going to have that HUD consultant. If you're doing a limited repair, if it's going to be under 31,000, then there's none required by me. I might suggest getting a regular home inspection because you kind of want to know everything that's wrong with it so that you can include everything in there, but it's not required. It's just strongly urged.
Is there a limit that you can borrow on the standard?
No, well, your FHA loan limit.
Okay.
So it depends on your area. My area here, it's $458,850. So I could buy a house for $1 and do $450,000 in renovations if I wanted to. As long as you don't go over the FHA loan limit, you can do whatever you want.
Okay, thank you.
Mm-hmm. So you asked, was there another
I'm
one?
sorry. Yep,
Yeah.
one quick question.
Sure.
As far as, so if we put a contract on a property and we want to do the 203K, then it's the lender, would be, the lender then is the one that notifies HUD, and then they appoint the HUD person to come out?
No. I would give them a name and number of 2 or 3 HUD consultants. There's really not that many, probably
Okay.
2 HUD consultants if they're going to go that route.
Okay.
And they're hiring the HUD consultant. So we're not telling them who to use. That HUD consultant's job is to protect them from the contractor and, quite honestly, from the lender. You know, they're there to facilitate the job. They're going to do the inspections as the work is completed. They're going to do the initial inspection, but if your buyer is having a problem with the contractor, they're going to reach out to the HUD consultant first and say, can you help me? I'm not happy with what they're doing. And the HUD consultant won't sign off on the work if it's not done right. So he's hired by the buyer to facilitate all that stuff and oversee that stuff. So as a result, I'm not going to tell them you have to use this person. Now, I will strongly urge them to use somebody, but I won't tell them who they have to use. But
Okay,
they're hiring.
thanks.
We have a message in the chat. Chris, can you
Okay.
do a 203K on a refi?
Absolutely. Yes. Yeah, we're part of the problem right now because people can't find houses. So a lot of people are just saying, you know what, I just want to renovate my house and we're going to do an addition, you know, or redo the kitchen. Yeah, there are certain things I hate and I'd love to be updated, but we can't find what we want. So we're going to do a renovation loan. Now, we're only going to do a renovation loan if they don't have the equity to do a cash out refinance to do it. If they can do a cash out refinance, then we're going to urge them to do that because you don't have the extra fees that are involved in a renovation loan or the higher interest rate. So, you know, we're always going to steer them in the way that's going to best benefit them financially.
Chris, I
Right.
have a quick question.
Absolutely.
I did one of these a couple of years ago, and they couldn't start the work until the loan was closed, until we went to closing. And then everything, I think they had like 30 days to get everything finished or something. What would happen if the house ends up being a complete disaster and ends up costing way more than what even the money set aside, like you said? What happens? How can the buyer be protected in that kind of situation?
I mean, they truly can't any more than a buyer buying any other property. They buy it and they find out that there's major problems.
Okay, all right.
Yeah, I mean, it's now the one thing that you said that they had 30 days. I mean, on a renovation loan, most renovation loans, you have 6 months to get the work done.
Okay, sorry.
No, that's okay. I just want to make sure everyone understands that you're definitely not putting a second story on a home in 30 days.
Okay.
So you do typically have that. You have the contingency reserve, but again, you have that HUD consultant that's going through that property, and the guy that I use primarily is a builder by trade, so he really knows his stuff. And I've only seen it happen once, and that was really the buyer's fault. She really was nuts. So typically that does not happen unless the buyer is just completely wishy-washy and it just all hell breaks loose after closing.
Okay. All
So
right.
I'm not saying it can't happen, but if you have a HUD consultant, it shouldn't happen.
Okay.
Where do you find the HUD consultant? I'm sorry, I don't know if I missed that or.
Well, I
just don't
usually
know.
give them the name and number of a couple of them, or you can go online and just Google HUD consultant search, and then you can search by state. Each state probably has 20. I mean, there's not a ton of them out there. And if you go on the list, half of the ones on the list are dead. They've been doing it forever, and you try and call them and their spouses, oh no, they haven't done this in forever. So they don't update the list very often, but it is HUD's list. So someone asked about pools. If you want to do a luxury item, instead of going FHA 203K, we would then do the Fannie Mae Homestyle. The Fannie Mae Homestyle works the same as a standard 203K, but you can do luxury items. So you can do all your landscaping, you can do your koi pond, you can do your sub-zero freezer. I want to, one of those grills where you flip your spatulas like at the Japanese steakhouse into the middle of my kitchen. You could do that on a home style renovation loan. And that the home style works exactly the same as a standard 203K. Still going to use a HUD consultant. Draws are done after closing. Everything there is about the same.
Is there a reason why you wouldn't just do that?
Well, one, you might not have the credit score to go Fannie Mae.
Oh, okay.
It could also be that you don't want to put 5% down, you want to put 3.5% down. And the rate is always higher on the home style than the 203K. The home style rates are not fantastic. Of course, the mortgage insurance is a little better. So, we're going to give them both options and weigh that out. Now, one of the things that we did is we said, look, home style renovation loans rates are not great. So we came up with our own program. It's like a limited repair 203K, but conventional. So if the work is going to be 15% of the purchase price or less, and you're not doing anything structural, we have our own Town Select product, which has a much better interest rate. The only caveat with that program is the work does have to be done in 75 days. So it is definitely not a large renovation. It has to be something that can be completed, within 2 months, 2.5 months. Any questions on anything so far? Okay. So let's talk about process, because he told you that I work for Town Bank Mortgage, and obviously Homesale is a completely different company. We do renovation loans different than every other mortgage company out there. Every other mortgage company, you go to your loan officer and you say, hey, do you guys do those 401k loans? And they kind of look at you funny and they, you mean a 203K? And they say, yeah, do you do those? And they say, I have no idea, let me look. And they look in their guideline book or online and they go, oh, 203K, yeah, we do those. And then they try and do a renovation loan. You do not want to work with someone that has never done a renovation loan, or maybe did one last year, or has done a handful in their entire career. That's where you have problems. I've seen just recently, we had a buyer, they had already closed. Their realtor sent me to try and help them, but they had closed on a house doing pretty major renovations, but the loan officer did not have them go to the city to get their plans approved ahead of time. So they went to do it after the fact, and the city said, yep, no problem, we can approve these plans. However, since you're doing more than 50% of the renovation, the value of the house in renovations, you have to bring the house up to code. Bringing the house up to code meant raising the property up 5 feet, which was $90,000. So they now have a house that they got this big loan on that they cannot fix. There wasn't enough money in there to do anything, and they are now stuck because their loan officer really didn't know what they were doing. The other way that it works is you go to your loan officer and they say, hey, do you do the 203K or a renovation loan? They say, well, I don't, but we have a renovation specialist. I'll refer them over to them. That's a little bit better. But the problem is your loan officer's been working with your buyers for, weeks, getting their credit fixed. So they know their history. They know what's going on. And then when you just take that loan and hand it off to somebody else, things slip through the cracks, because the renovation person is concentrating on that renovation piece and the credit piece is secondary to them. So the way we do things is you go to your loan officer, they take the loan application, it is their loan. They work with the buyer and their processor on the credit side, while I work with the buyer and the contractor on the renovation side. We work side by side. I stay in my lane, they stay in theirs. I don't have to track deposits, which are the bane of my existence. They don't have to talk to contractors, which would be the bane of theirs. We stay in our lanes, we meet at the end, we close on the loan. We are closing on average this year, 39 days processing time to finish. And that includes big renovations or small. So we're closing them quickly because we're working side by side instead of the way other people do it. The other benefit to the way we do it is I am there until that last nail is put in the home. So after closing, if they're having a problem with the contractor, I already have that relationship with the buyer. They know to come to me if there's an issue, not to you. You don't want 2 months after closing, your old buyer calling you back and saying, oh, my contractor hasn't showed up, I don't know what to do. They know that I'm here. I've been in the mortgage business for 25 years, and I've been doing renovation loans almost exclusively for 22 of the 25. So I've been doing these things forever, and the buyer knows that if they need help with their contractor or something, I'm going to be there to help them. If I have to drive up to the city to get plans done, plans approved because something falls through, then that's my job. That's what I'm going to do. So they have that. And the people that work with me, the loan officers and the realtors and the buyers know, my phone's on from 8:30 in the morning to 11 at night, 6 days a week. Monday night is poker night. So you can't reach me on Monday night, but every other time you can reach me between 8:30 and 11. Any other questions on what we've talked about so far? All right, so how do you use renovation loans? How, as a listing agent, could you use a renovation loan to increase your business? So jump on in there. This is always a little different than when I'm in person with this whole Zoom thing. It's driving me crazy. All right, so one way you can use renovation loans is to save deals. That's the easiest way. So if that appraisal comes back and the appraiser says, yeah, everything's okay, but the roof needs to be replaced, and the seller doesn't have the money to replace the roof, you can say, you know what, Mr. Seller, what we'll do, we'll offer $10,000 less. We'll replace the roof and we'll do a renovation loan, or maybe $15,000 less. But you can negotiate saving that deal. If there's termite damage, if there's anything that the appraiser says, no, you can't close on this, and the seller won't do it, then we can do that. Other ways as a listing agent, if you have a house, and again, it's not necessarily something that is a problem now because everything's selling now, but it will be again in the future because we all know this business is cyclical. But when you get that property that has functional obsolescence, or the kitchen, looks like it's from the 50s and that's why it's not selling, what you can do is we can do listing flyers that show, hey, we've got a bid from a contractor to update this kitchen. If you did a renovation loan, here's what your purchase price would be, here's what your loan amount would be, here's what your payment would be, and you can redo the kitchen yourself. And we can show, what a renovation loan is. We can put pamphlets and flyers explaining the process and everything in there. That way they can fix it up the way they want to. How about as a buyer's agent? Anyone think of any way to use a renovation loan as a buyer's agent?
Well, that's easy.
There we go.
I mean, with the market, what it is, they can get a house for much less than what they were losing out on.
Right.
With the multiple offer situations, and then customize it the way they want.
Yep, absolutely. There's a couple ways. I like to use this example. Let's say you have desk duty, or someone calls in, you've never met, it's a young couple, and you bring them into the office and you say, well, sit down, kind of, what are you looking for? What's important to you? And they say, well, we want a 4-bedroom, 2.5 bath, 2-car garage. If it could be on the water, that'd be fantastic. If not, pool, we're okay with that. You're getting excited because, the price keeps ticking higher and higher as they keep talking. And then you tell them, or ask them, well, what do you want to spend a month? And they say, well, we rent for around $850 a month. We'd like to keep it around $850. And then you show them what they can get for $850 a month. And typically what they do is they take one look at it, they put their nose up in the air, and they say, you know what, that's not really what we were looking for. I think what we'll do is we'll rent for another year and we'll look at it again next year. Well, the problem is, he works at Target, she works at Geico, they might get $1 an hour raise, but they won't have saved any money. Interest rates, probably will be higher. Housing prices will probably be higher. So they're not going to qualify for any more next year than they qualify for now. But if we can teach them how to buy those properties that investors buy, it's not your dream home, but it's your starter home, and one that has built-in equity because you're buying it under market because of its condition. And they stay there 1 or 2 years. They take that money that the investor was going to make and they roll that into their next home. And then they do it again. And 2 years later, they roll that into their next home. I grew up in a 4-bedroom, 2.5 bath, 2-car garage home with a pool. But my father retired as a captain in the Navy. But their first home was a trailer. Then they moved into the ranch. Then they moved into the 2-story. Life was a progression, but it took them 20, 25 years to get to that final home. Kids these days are a lot smarter than we were, and they understand you put a little money into something, you can get a lot of money out of it. They can do that and get that final home that they want in 10 years because they're smart enough to do it. I mean, this is the HGTV generation. Everyone sees it on TV, they get it. They just don't know there are loan programs out there that will allow them to do that.
Is there a time frame? Like they have to live in it 2 years, or so it's not considered a flip, or does it work?
It's not a flip issue. It's I think it's capital gains. I don't know. There's a tax implication that I think at 2 years, you're okay to then move it into your next home. But I would tell you, talk to an accountant. But I believe that it's 2 years you have to wait, that you don't have to pay regular income tax on any profit you make from the property if you roll it into your next home.
Right. But no condition of the loan itself.
No, not at all. It has to be your intention to live in the property. If you have a reason to move, then that's fine. Now, if you buy it and you move out in a month, FHA could come back to you and say why, but hopefully you're not doing that. And if you do that multiple times, then the lender is going to say, we're not going to let you do a loan because we don't believe you. One other way that you can use renovation loans are Actually, do this. My wife used to be in real estate. And then we had kids, and then she started staying at home with the kids. And the kids got to be about school age, and I started looking at my watch and saying, yeah, might be time to go back to work. You know, you're a realtor, I'm a loan officer, we can get the team thing going. And she looked at me and she said, Chris, I can't stand working with stupid people. And of course, my gut reaction is she's talking about me again. But what she was talking about are those people that you put in your car and you drive them around weekend after weekend after weekend, showing them the perfect home, but they can't get past the 70 shag carpet, or they can't get past the Pepto-Bismol color in the one bathroom, or that the kitchen's a little outdated. It's in the neighborhood they want, it's the size they want, it has the backyard, it's everything but that one little thing. And you don't mind showing us some more houses next weekend, do you? If you have an answer for that and you can tell them, you know what, we're not going to find a better house than this, and we can fix the carpet. It's not a big deal. You don't even have to come out of pocket for it. We can do the carpet and put in brand new windows for $10,000. You do a renovation loan, we close easy peasy, and the house is exactly what you want. I have a tagline on all of my marketing stuff, and it says, it's difficult to find the perfect home, but it's easy to make every home perfect. Because that's truly what the renovation loan can be. It can make the house everything that they want it to be right when they move in. The Harvard Joint Study of Housing says every year they do this, and I think it's 40% of homeowners, new homeowners, do major or minor renovations within the first 2 years of buying their home. So they move in knowing what they want to fix. They just don't know there are loan programs out there that'll let them do it when they buy it. So, you know, to me, that's a way you use renovation loans.
I have a question.
Yeah.
Can you use it to retrofit the home to make it handicap accessible for someone in a wheelchair who they can't find that perfect home?
Oh, absolutely.
Okay, good. That's what I.
Yeah. Any other questions?
There's a couple of things in the chat. I'm just gonna read them to you.
Okay.
One's a comment that says, I just recently witnessed a loan officer from a local lender discourage new realtor members from 203K. So it's important to align with a lender who's versed in the program. So that's a good thing. And then the second is a question. Would putting a walkout basement door and stairs be considered a luxury item?
Just because we don't do basements in Virginia Beach, what is a walkout basement?
Like, so you have a full basement,
So
but
you just, okay, so you're building out the basement
like it has
into
a
another
slide
room.
out or a way that you can walk out to it.
Oh, no, that would not be a luxury, no.
Great.
Is there another one there too, or just the two?
I think you answered it. It said, can you do it on a refi? And you addressed that.
Okay.
Okay,
And
I had
to-
a question. I finally remembered what it was.
Mhm.
A property that needs things removed from the property, an uninhabitable mobile home or a falling down barn. I mean, can they use the monies for doing that sort of thing?
Yes, as long as there is still a primary structure on it.
Okay,
So, but you can't like remove a mobile home and then try and build a new home there. That's new construction because the house is now gone.
yeah, I'm thinking if it has a house and then it has a
Yeah.
mobile home on the property, it's never come off. It probably got put in.
Yeah, that's
Exception, you know,
absolutely no brainer on that one.
okay.
And Cheryl had mentioned the one comment about the loan officers discouraging renovation loans. And again, the reason that happens is because the loan officer doesn't know renovation loans and they just don't want to deal with it. We still have loan officers in our own company that, you know, don't want to deal with it, but they don't understand how easy It is. The loan officers that do renovation loans or are willing to do them over and over and over again because they're like, oh my God, I didn't have to do anything. It was taken care of. Everything was easy. But historically, that's not been the case because historically there were not specialists that did renovation loans. So the loan officer had to try and figure it out on the fly, and it just didn't work well. I'm trying to think if there's anything we did not cover.
I have one last question.
Yes.
So we're doing this loan, so let's say we're using the HUD person, because it's a high dollar amount. You need all of those bids in before you can approve it, correct?
Correct. I mean, I will only take the bid that they're going to use. I don't make them do multiple bids. So whoever they're using as their contractor, yes, we have to have that stuff before closing because I'm going to approve the contractor in their bid and make sure it matches up with the HUD consultant's report.
But that can be worked on after it's ratified, or does
it's always done after ratification?
Okay.
Yeah, because you don't want to spend money until you have a ratified contract. So, and you do have to pay that HUD consultant up front for that report. Now it's part of the loan, so you pay it up front and then they get a credit back at closing towards their down payment because we financed it into the loan. All right. So my goal here, yes.
One more question. I get the question a lot from people who want to do a 203 that they want to know, can they do the work themselves? Can they have a contractor act as a GC and they can do some of the work? How's that?
Yes. The answer to that question, we don't care who the subcontractor is. The contractor is getting me a bid saying I'm going to do the work for this amount of money and I'm responsible to make sure that this work is done. And then any negotiation that the buyer has with the contractor is up to them. But I'm going to look at that bid and make sure it's realistic. Because if, the contractor says, oh, I can do the carpet or I can do the paint and it's only going to be $200 to paint the whole house. No, I'm not going to approve that. For the same reason that we will not allow the contractor to be related to the buyer. So if Dad's a contractor, even if he's a Class A contractor, he cannot be the contractor because Dad's going to cut Junior a break. And if Dad says, hey, I could do the work for $15,000 and it really would cost $30,000, God forbid Dad gets hit by a car after closing, we now have $15,000 in there to do a $30,000 job. And, we're just not going to do that. And the other reason it's too easy for them to take money out when they know the contractor and, getting a little funky with the numbers. So you can't be related. You also cannot act as your own general contractor for the same reason. So we do have to have a general contractor, and they need to be licensed for their work and they need to have adequate liability insurance. Other than that, they can use whoever they want. Okay. I will also tell you, I will try and help them find contractors if they're stuck. Because the one piece in this entire thing that takes any time is them selecting a contractor. So if a week in, they're not making any progress, I'm going to try and help them find one. I'm never going to tell them who to use, but I want them to know that I'm here to try and help. So if it's an area that I know well, then I'll give them 2 or 3 names of people that we've used in the past to try and jumpstart that a little bit because we want the loan to close on time. Yes, ma'am.
What's the general fee for the HUD, when I say the HUD consultant?
It's a sliding scale based on how much work is done. So if it's $5,000 to $10,000, it'll be $400. If it's $15,000, it goes to $500. $30,000 goes to $600, all the way up to about $1,000 if you're doing 100,000 plus in renovations. And it's the scale is put out by HUD. And quite honestly, that scale hasn't changed in the 20 years that I've been doing this. So they have not gotten a raise at all, which I'm not complaining about. It still seems like a lot of money to me. But so that's how that works. Any others?
Hey, Chris, I know you mentioned the reserve amount, and I know you typically have a little bit more to talk about as far as what you can use if that's not used. So,
yeah, what happens with that contingency reserve is we're holding that extra 10% for emergencies. If that money is not used, the money is either going to be applied to the principal, or if there's something they wish they had done and didn't, they can use the money for that. So a lot of times what I'll tell them is if they're going to have a rather large contingency and their appliances are okay, then I'll tell them, you know what, leave the appliances out if you'd like. And then if that money is left over and there are no emergencies, you can use that money to do the appliances in your kitchen. Because I don't want them to have to borrow more money than they really need, but only if they can live with the appliances, because there may be an emergency. Usually isn't, but it could be.
I'm sorry, can I ask one more question?
Yeah, absolutely.
Sorry.
Mhm.
And I don't want to sound stupid, but I've never done one of these loans before, so
Sure.
I'm just going to ask. So you actually settle on the property and then the work gets done. What happens if the work doesn't meet the need, your requirements?
Well, I mean, we're going to find out. The way it works is you write the contract, we get the bid or the HUD consultant's report, and then we give that to the appraiser. Now, the appraiser is going to tell us if there's anything that needs to be added to this report that would not pass minimum FHA standards. So we're going to know before closing if that work will cover everything. Now, if that work is substandard, they hired the contractor. They'll fire the contractor, get someone else in there. You know, they're going to have to figure that out. We're not hiring the contractor, they are. I'll help them through that process, but ultimately it's the same as any other homeowner hiring a contractor. If they're not happy with the guy that they hired, you know, then they say, I'm not paying you until you fix it, or I'll pay you this, but I need to get someone in here to fix what you've done or haven't done.
If they run into additional problems as they go, what happens?
Well, that's what that contingency reserve is for.
But what if it exceeds that?
Then that, again, they have to come out of pocket to fix whatever they need to fix. Or we go back and say, okay, you had this emergency. We need to take this fluff out of the work that you're doing so that we can reallocate that money to fix the thing that has to be fixed.
Okay.
Because health and safety has to be done, but the gold fixtures in the bathtub maybe don't have to, you know, that kind of thing.
Thank you.
Chris, is there an extended period of time for processing to get to settlement, or are we looking at a typical FHA process time?
You're really looking at a typical, like I said, we're averaging, I think it's 37 or 39 days so far this year for processing. So I would say write your contracts for 30 to 45 days. Now, if they're doing major renovations, write it for 60. I mean, if they're doing an addition or something like that, I would say 60 days. Other than that, 30 to 45 should be more than sufficient, as long as your contractor or your buyer's on the ball. But if your buyer is wishy-washy on what they want to do, then that can take time, because I can't order the appraisal until I get the contractor's bid. That's the only piece that's going to drag us down. So they just have to know what they want to fix and jump on it, and then we get that appraisal ordered, we get it back in a week, and we're good to go.
And rates, are they much higher with this program?
Yeah, I mean, it depends. The 203K right now, if you're under 200,000 for some reason, it's only like 2 3/4, 3%. But if you're over 200,000, it's closer to 3.5%. It's kind of a really weird dynamic right this second. Homestyle is probably closer to 3 3/4. But yeah, they're always going to be higher because they're more risk, and they're even higher now than normal because they're a scary loan for investors. And investors right now want generic, black and white, easy peasy loans. They don't want anything with any kind of potential to have problems, because they're so busy right now that they're like, look, if we only have the ability to do so many loans, I would just rather do generic loans than have to do these. So the rates are a little higher than they would normally are. Normally, you're only 0.25% to 0.5% higher than your normal loan. Any other questions? All right. Well, my goal with these things is just to kind of point out, the things that are out there. I always used to like the example. I ask and no one's going to be able to tell me, but raise a hand if anyone remembers the movie Dead Poets Society. 1, 2. Okay, so we got some. It's an old movie. Robin Williams plays a teacher in a 1950s boys' school. And as part of his class, what he does is he has the kids come to the front of the class and stand on top of the desk and just look at their world from a different perspective. That's what I'm trying to do here. I'm trying to get you guys to look at your real estate world just a little differently than when we got on this Zoom call, because there's a lot of business out there that people completely ignore, or loan officers that don't want to deal with it, that kind of thing. And there's realtors same way. But there's a ton of business out there that is completely ignored by a ton of people. If you're a walker or a runner and you do the same path every single day, and tomorrow you do it in the opposite direction, you'd be amazed at what you see out there, because we get so wrapped up into this is what my real estate world is. This is what my world is. And when you just open up to look at things a little bit differently, there's a ton of business out there. So just open your eyes, be open to it. And if you guys need anything at all on the renovation side, your loan officers can give you my number. I'm only going to handle the reno side. I can handle any reno question, but you go to your loan officer for the regular deal. I think that's all I got. 51 minutes, not bad. All right.
Thank you very much.
All right, guys. If you need anything, let me know.
Thank you.
All right.
Thank you, everyone.
Awesome. Thank you, guys.
Thanks.